What's up, guys, and welcome back to the channel. So the company I want to go over today is a company that many of you may know. The company name is Vizio. The ticker symbol is VZIO. And the company very recently went public. So they just started trading on the public market. I love the products. I have maybe 4 Vizio sound bars in my household right now. I think they're pretty good devices. I'm looking at their OLED TV. Heard some good things and some bad things about it. I haven't pulled the trigger on it yet, but nonetheless, it's a good company. What actually brought me to Vizio is the ROKU company. So let me break down quickly what Roku's doing and why the market cap just keeps going up. I believe it's a $50 billion company now. The stock is either $400 or $500 per share, and I don't see that coming down anytime soon. The reason why Roku is so hot right now is because it's looking like the natural replacement for the cable business. We're going to get into it. We're going to look at the subscribers. We're going to look at some of the numbers, but it's looking like Roku is going to be one of the companies that's in line to replace cable. They're actually first in line. So let me explain how it works. Roku was really smart about their business and how they plan to grow revenue. So the company basically partnered with the prominent TV manufacturers, be it TCL, RCA, some of the prominent TV manufacturers, and they made an agreement to not manufacture the TVs, but to have the TVs pre-installed with their operating system. What that did for Roku is it opened up a new revenue stream when it comes to advertising. Before, in order for Roku to serve you ads, you would have had to go out and buy a Roku dongle. But now when you buy a television set, it's going to come pre-installed with the Roku operating system. It was an absolutely genius move. If you own a Roku TV, you know that you get ads on your screensaver, you get ads on your home screen. They do home screen takeovers. They do a lot when it comes to advertising. There was some positive news on the latest upfronts, the market upfronts, and Roku said that they're seeing a 30 to 40% increase in what companies plan to spend with them as far as advertising goes. So stock's not coming down. People think Roku is overvalued. I actually agree with that, but as long as they continue on this trajectory, I don't think the company's going to come back to us as far as price anytime soon. But nonetheless, Vizio's probably not going to catch up to Roku. I think we can all admit that. But can it be a close second? Can it be a distant second? I don't care. I want to take a look at the company because in some ways they're trying to copy Roku's business model. If they're successful, I think the market's going to reward the company just as they're rewarding Roku. Maybe not so much as Roku, but once again, the question is, can they be a close second? You know what we do here, guys? Let's dive in and take a look at some of the inner workings of Vizio, and let's determine if we think it's a good investment or not. All right, guys. So before we get into Vizio, let's take a look at Roku. It's #1 chief competitor, and they're currently the measuring stick for streaming services. Like I said, Roku's looking like they're going to be the natural replacement for the old cable business. So what we want to look at and what I care about the most is active accounts. And if you look to the left, from 2016 to 2020, Roku has more than doubled or even tripled their active account base. They're at 51.2 million active accounts. I highlighted a point in the paragraph in green for you guys, and it basically says that Roku's U.S. active account base is now more than twice the number of U.S. video subscribers of the biggest cable company. So Comcast, I believe, is the biggest cable company in the United States. I believe they have upwards of currently about 18 million plus subscribers. That number used to be about 22 million subscribers, but we know what's happening in cable. There's a wide evacuation from the cable business, and it looks like people are going to companies like Roku. That's why the company is so valuable, and that's why the company's value may continue to climb. I personally think the stock is way overvalued. I think it's way overvalued. I think it should be trading at maybe half the price, $25 billion, 250 or a few dollars less price per share. But the company is way overvalued. But I get why people are investing in a company that they think is going to replace cable. The growth isn't subsiding at all either. This is accelerating growth, guys, as far as members are concerned. This number is accelerating, and it probably will into the future. But I think the question with companies like Roku is, can they get in and can they start to grab share? So we'll see. But that's what's happening with Roku. Let's also take a look at some other Roku data, because that's not just the whole story. The company across the board, if we look at total net revenue, They listed platform revenue, which is their revenue from their operating system, and total gross profit. There's just everything's up over 50% year over year. They're just completely knocking the cover off the ball. And once again, that's why the company is what it is. They want to be the leading streaming platform. They want to have a connected ecosystem, and so far it's working. Like I told you guys, personally, I think the business model was brilliant because before, Roku was relying on their dongles, but now the operating system is coming pre-installed on a television set, which kind of cannibalizes themselves, right? Like, why do I need to buy a dongle if my TV already has the Roku operating system on it? But nonetheless, if you got to cannibalize yourself for growth, that's what you do. Apple did it with the iPod. You used to buy an iPod, but now they come pre-installed on the iPhone. But I digress with that. But that's why Roku is what it is. And this is what it looks like, guys. For you guys who don't have a Roku TV, I have 2 of them in this household. This is what it looks like. So you buy a TV, you turn the television set on, you connect it to the internet. You're then going to be asked to install a suite of apps. And once you install your suite of apps on Roku TV, this is what it looks like. And to your right, you can see that there's a TurboTax ad. This is where the revenue uptick is coming from. The ad dollars are slowly flowing to streaming, and Roku is becoming the #1 player there. So that's the story in a nutshell. So let's move on to Vizio, the company that I'm currently looking at. I haven't bought any Vizio shares, but I may in the future. We'll look at the valuation because I think I want to buy it cheaper, to be quite frank. So let's look at Vizio's revenue. Let's look at the income statement. So Vizio's revenue isn't explosive. So from 2018 to 2020, we've gone from 1.7 billion in revenue to 2 billion in revenue, which is a decent figure. It's not terrible revenue, but it's not explosive either. Revenue growth, but it's not explosive either. Now, net income is a different story. So from 2018 to 2020, we went from negative net income to 102 million in net income. So the company, I'm going to, of course, delve deeper into that. But the company is keeping more money, which is good for you as a shareholder, because we believe that what eventually drives the price of a stock is always going to be the company's ability to grow earnings. That's what I believe as a stock buyer. Down in the yellow, earnings per share has also grown from negative to 55 cents per share. Once again, we want to see that number tick up, but we'll see what happens. They currently have 183 million shares outstanding. They've kept that steady. Will the company issue shares? We don't know. I don't see any reason for them to have to. I believe the cash position is okay, but the company could issue shares, which is negative. But so far, they've been keeping them steady, and I like that. It'll be better if they start to retire some, but they've been keeping it steady, so I'm cool with that. So that's where the company stands financially now. But that's not the thesis. Let's get into the financial highlights of Roku. So why are we even looking at the company? So they did a highlight form in their investor presentation, and let's go through them one by one. They're currently the #2 best-selling TV brand in the United States. That's a huge positive. They're the #1 soundbar brand in the country in the quarter for the last quarter, which is cool. Like I said, I have 3 of them. TV shipments are growing. They're quoting 28% year over year. Soundbar shipments to retailers like Best Buy, etc., grew 155% year over year, which is to be expected. We've been locked in because of COVID last year. People probably upgraded their TVs. They're spending time at home. They wanted better sound bars. But the thing to really pull from this is, as Roku sells more TVs, more people get the operating system. So Vizio's operating system is called SmartCast, and it comes pre-installed on the Vizio TVs, just like Roku. That's going to be the driver going forward. So let's look at where they currently stand with that. So currently, the company has 13 million SmartCast accounts. That's up 13.4 million in total. That's up 57% versus last year. Now, let me say this. Those aren't Roku numbers, but that's an impressive number. Look over at the chart to the left. So from Q1 of 2020, they had 8.5 million accounts. They're currently at 13.4 million accounts. It's not a double, but it's darn close. 57% they're quoting. Now, what that means is there are more households that are using the SmartCast operating system, which means that more households are watching ads on Vizio's ecosystem, which is eventually going to equate to more revenue for Vizio. That's one of the main reasons why I'm currently bullish on the stock. I think going forward, because they have more Vizio televisions in the household, Vizio is going to be serving more ads to more people, which is going to eventually lead to higher revenue. That's the number one thesis for the company. They've made themselves into the number one smart TV company, and that's going to mean that they're going to be selling more ads. And this is what I mean by they're copying the ROKU model, because I really believe that they just kicked this process up in 2018. They really began to focus on not TV sales, but SmartCast and what's going to happen with that in the future. So they really started to focus on that in 2018. At the bottom, viewing hours are also up. So total viewing hours of 7 billion, up 42% versus last year. This is a very strong indicator, guys. You know, the one thing I'm not real big on with Vizio is that they do, in order for you to get the operating system, you do have to buy the TV. There's no SmartCast dongle as far as I know. SmartCast, the operating system, isn't featured on any other devices from what I know. You have to buy a Vizio TV to use the SmartCast ecosystem, if you guys get me on that. But nonetheless, the company's doing a wonderful job of just having more Roku TV sets in households. And I think it's going to be a huge positive going forward. So let's do some analysis, guys. Let's take a look at the company's market cap. And remember, we look at market cap over price because when we buy stocks or we consider a stock, we're going to put ourselves in the place of a billionaire. We're going to pretend we're going to buy the entire company. So to buy Roku right now will cost you $56 billion. To buy Vizio will cost you about $5 billion. Huge difference, guys. Huge difference. But my question is, if Vizio can consistently show that, hey, look at us, we also have the Roku style of doing business, we have an operating system, it's becoming our chief product, can the company get to $10 billion? Can the valuation double, which would make it a $50 stock? I don't think it's out of the question. I don't think it's out of the question, especially when you consider that the company's now the number 2 television set seller in America, and more people are going to be using their operating system. I don't think it's out of the question. So is the company going to get to 56 billion like Roku? Probably not. But can it get to 10 billion? Can it get to 15 billion? I 100% believe that. So next, is the company cheap? Can we buy Vizio on the cheap? And the answer is no, guys. We look at the PE ratio as one of our key indicators. I use Morningstar. They don't have all the data, but they do have the current PE ratio, and we can compare that to the index that Roku trades in. So currently, Roku's PE ratio is 52.8. The index that it trades in is at 25. So we can't buy Roku cheap right now. We can't look at ourselves and say we're buying this company cheaply. So if you want to ask yourself if you're buying the company on the cheap, the answer is a resounding no. If you buy Roku now, you are indeed overpaying, guys. Personally, I want to own the company because, as we went over, I'm excited about the long-term growth prospects. I'm excited about what SmartCast could be. I'm excited about the potential of Vizio's market cap kind of creeping up on Roku. I think that could happen. Can it catch it? No. Can it creep up a bit? I think it could happen. Personally, I want to buy the shares at 19 to 20. The company's at $26, $27 right now. Will it get there? I mean, who knows? But I would be a buyer in that $19 to $22 range. I'd be taking a really strong look at Vizio. So I'm going to put it on my watch list for now. And I'll leave it there until things start to change. So there you have it, guys. That's the majority of the bull case with Vizio. I really like the company. I like what's happening with sales. I know that they're getting a COVID push. They're selling more TVs. That's probably we're gonna be able to attribute a lot of that to the COVID pandemic and people being confined to the households and wanting to upgrade their TVs and their sound bars, as we saw in the presentation. But the silver lining to that is people now have these TVs in the households and installed, and they're probably using the SmartCast ecosystem. The more people that use the SmartCast ecosystem, they're going to be subject to Roku's advertising system, and that's going to mean more money eventually for the Vizio company. We looked at Roku. Roku's a really strong company. Now we see why. I don't think Vizio can catch up to Roku. That's not the expectation. But if Roku is a $50 billion company, Vizio's a $5 billion billion company. Vizio's actually profitable, whereas Roku isn't, from what I believe. Can Vizio get to, can the valuation double? I think that's absolutely possible that Vizio can go from a $25 per share company to a $50 per share company, especially when the market catches wind of what the company's doing. The company just recently went public. They haven't been publicly traded for very long, but there's a lot of optimism around the company from what I can see. It bounces in this $19 to $27 range. It bounces there. If it falls to $19 to $20 again, even in that $22 range, I'm going to be picking up shares because I like the long-term growth prospects of the company. I'm actually looking at the Vizio OLED TV to install in my living room. I like the price point on it, but nonetheless, I'm excited about what the company's doing. They're pretty much copying the Roku model. Once again, they're probably not going to catch Roku, but can the valuation of the company double? I absolutely think so. So that's my theory on Vizio, guys. If you like the content, please hit the like button. If you want to support the channel, hit the subscribe button and leave me a comment and let me know what you guys think about this idea. Thanks for dropping in, guys. I'm Ty. I'll talk to you guys later.